My people, may pips be upon you. Let's give the breakdown on the situation that we see with New Zealand dollar, Japanese yen. All right, let's start from the monthly. What do we see? We see that price, if I can just get to it, we can see that price has broken a downtrend to the upside. All right, and that's cool. That's always cool to see. All right. And we can see that price did give us a nice transition from bearish momentum to bullish momentum with this inverted head and shoulders that we see here. Right. And that's good to see. So we are bullish here. All right. And we made a higher high, higher low, higher high, higher low, and we broke structure. And that is the most important and most salient. You like that word? You like that said salient word? The most salient, most important aspect of this whole breakdown of the monthly uh, uh, time frame. On this time frame, we see that price broke structure to the upside. That means we are bullish. And after a break of structure, what do we expect? We expect price to return to impulse. And that would be the impulsing order block that sent price up to break that structural point in the first place, right? Wrong color. Now it's right. All right. So what we're looking for is this. Boom, boom, boom. We're looking for price to continue to make higher high, higher low, higher high. We're looking for a price to make the higher low on the monthly time frame. The higher time frames dictate what the lower time frames are going to do. It gives the lower time frames their targets. Okay, that's what we need to remember. All right, so this is what I'm looking at right now on the monthly. Let's go to the weekly. And what do we see? We see clearly price did transition here, right? With this low, lower, higher uh, inverted head and shoulders, but this one is really more a quasimodo, because the difference between them is the neckline. All right, with inverted head and shoulders, you'll see a more symmetrical, even head, you know, neckline. Quasimodo gives you the low, lower, higher aspect of the head and shoulders, of the inverted head and shoulders. That's all I'm worried about. Anyway, so much for that lesson. Okay, so what we see here is a higher low, higher high, a higher high, excuse me, higher high, higher low, and this break of structure. We have two breaks of structure, and we need to make note of them. All right, this is a significant break of structure, breaking that higher high, and then we break this one up here. We know this one is just letting us know, you know, price is very, very went bullish, and we're looking for that return to the impulse. On this time frame, we're going to mark it this way. All right. Some people will say, "Hey, how come you're not going from wick to body like so to mark your uh, order blocks?" This is the move. This whole move is the down move. Price is the order blocks are not just an engulfer, a bullish engulfer. The order blocks to mark supply, you're marking the whole down move. All right. If you go to the 3 month time frame, or the monthly time frame, or matter of fact, we can just take a peek at it real quick. Sorry. Uh, you can see this turns into that bullish engulfer. It is what I'm trying to point out is it's a range of price. All right. And you wait for the breakout. That shows you where your order that forms your order block. Okay, it's a range of price, the last down move before the up move. All right, in this uh instance, we're looking here at the weekly because uh, this starts my POI. You can have your POI, your point of interest, start here if you'd like. But a lot of times you'll see price come down here and stop right here and then go back up. Okay. And you're saying, "Oh man, I was waiting down here for price to come get me." It's because you didn't start it at the right place, man. Start looking here. If it gets down here, it gets down there. We look for the transition of price there. All right. But if it decides it wants to turn, because this is an untested order block, and it'll be very sensitive to a touch, boom, and just take off, then then you do yourself a service. That's all I'm saying. All right. Let's see, bullish. All right. So we're looking here on the weekly, from a weekly aspect. I think this is a fair place to start looking. All right, as your POI, when price comes down here for the return to impulse after a break of structure. Right. Let's go to the daily and take a look. All right. Here we can see it very obviously that price is very bullish, and we see this lovely impulse here. We see that there's inefficient moves of price here. All right, if you don't know how to see those what some people could call imbalances or fair value gaps, that's these areas here where price just moved without coming back to mitigate, with a wick or something. Price will come back through all of this to mitigate all of uh, these imbalances, this inefficient move of price. All right, because these are inefficiencies. This draws price to it because that's what price does. If you look like this big inefficient move of price came right back up, mitigated the whole thing, mitigated the whole move. Price moves down, it comes back up. Price moves down inefficiently, it comes back up to balance the imbalanced. You understand? All right. That's a quick lesson. All right. And we have these inefficient moves here. I'm marking them as imbalances, but we just want to keep these things in mind so that we know that price has motivation to come down here. All right. Now, on the daily, how are we going to mark this order block? Well, I like it marked the way it is. I'm going to leave the weekly in place where the POI starts. All right, but I will be looking here because this is right under the imbalance for this uh, the daily order block. I'm going to mark here. All right. I'm thinking that price will probably could possibly come as far into this order block for a return to impulse. I believe it may even make it down this far into it. It might come right down here, and then what we're going to do is look for price to transition here. And I'm going to give you a very rare look right now. We're looking for price to transition here from bearish momentum to bullish momentum. We're looking for that lower, higher uh, reversal pattern on the lower time frames, talking about from the hour to 15 to the 5. Got it? And I will enter on the 1. So this is what we're looking like here. Looking for price to make that higher low that is dictated by the higher time frames here. Now, what I want to show you is on the 4 hour. Come on, man. Why do I always do that? What I want to do is show you on the 4 hour what could be the possible situation at hand. All right. Now you see, we had a break of structure here, and you see this 4 hour order blocks here. All right. Now this is the monthly order block. This is the monthly supply zone. All right. And we have this 4 hour sitting on top here. So I'm going to make sure I look here. I'm going to make sure if when price gets in this area, that we don't see, that we don't get that transition early, okay, before it gets to the daily. Okay, there is an imbalance to straighten out here, but it doesn't necessarily have to do it now. Okay, it doesn't have to do it now. It can come back and get it later. All right, that's the one thing about imbalances and inefficient moves. It doesn't have to do it when you think it should do it, but it will do it. All right, so I'm gonna start looking here to see if price starts to transition. What price point is this? 78,600. And if price starts to give me my transition there, then I'll look for a long position, because this is going to be a very nice position for a day trade or a swing trade. Very nice. This is going to be a nice day trade. Taking it down to this, there's a lot of pips to get between here and there. Now, this is counter trend, so price could turn around at any point. All right, that's the risk of counter trend trades. They're high risk. All right, but once price gets past this point here, it's going to start taking out inefficiencies, and uh, there's a lot of room to for price to fall before it gets to a place where it could potentially turn around. So this is what I'm looking at price to come down, make the higher low, and then make the higher high. There's going to be a nice day trade, and for swing traders and day traders, this will be a nice day trade to take down a short swing, if you will, but it is counter trend. All right. This will be the more high probability trade. Once it gets down here, it gives us our transition. So we're going to look at this area for price to transition. Okay. I hope you benefited from this analysis. I will see you in the next video. Make sure you leave a like and leave a comment. Give me some feedback on this setup. I will see you in the next video. Okay. Be careful.